Hello, my name is Valerie Alvarado, and today I'll be talking about FHA loans and VA loans. An FHA loan is a mortgage that is insured by the Federal Housing Administration. They are most popular on first-time homebuyers because they only require a 3.5% down payment with a credit score of 580 or higher. Now, if the borrower has a credit score of 500 to 579, they will require a 10% down. Remember, if your credit score is low, then the interest rate will be high. Also, an FHA will require to have an MIP, mortgage insurance premiums, which protects the lender if the borrower defaults. The FHA program was created in response to the rash of foreclosure and what happened in the 1930s to provide mortgage lenders with adequate insurance and to help stimulate the housing market by making loans accessible and affordable for people with lower credit scores and lower down payments. Now, the requirements for an FHA loan: not only do you have to have a excellent credit score of a 580 to get a 3.5% interest rate, but now the borrower must have an employee history of 2 years. Also, a mortgage lender will look at the debt to ratio, looking to see if the borrower will be able to pay the loan. In most cases, lenders want a front-to-end ratio, total proposed mortgage payment, taxes, and insurance, of no more than 31% of gross income, and a back-end ratio which includes the mortgage payment and all other monthly debt to credit student loans typically cannot be more than 43%. Some lenders allow for a high debt to ratio up to 50% for the back end calculation. However, the lender has to justify why the loan is affordable to the borrower, making underwriting more challenging. Borrowers must have a variable income either with tax returns, bank statements, or pay stubs. In addition, an employment history must be provided and verified for the last 2 years. FHA loans can be used for primary resident purchases or refinance transactions. The property must meet FHA guidelines when it comes to the appraisal. Now, a VA loan. A VA home loans are one guaranteed by the U.S. Department of Veterans Affairs. They are created by the government in 1944. Since then, more than 24 million VA loans have been originated, helping veterans, active duty members, and their families purchase a refinanced home, have at least 90 consecutive days of active service during wartime for at least 181 consecutive days of active service during peacetime, have more than 6 years of service in the National Guard or Selective Reserves, be the surviving spouse of a service member who died while in active duty, or for service-connected disabilities, and you have not remarried or remarried after the age of 57 or December 16, 2003. Spouses of prisoners of wars or service members missing in action are also eligible. Meet the lender's requirements for credit and income. The VA doesn't set a minimum credit score for VA loans, but lenders can set their own minimum standards. The lender will also consider your income and debt to evaluate your ability to repay the mortgage. Borrowers need to show they have the income to make the mortgage payments, and they shouldn't have a huge debt load. While there is no minimum credit score requirement, borrower might have a hard time getting approved by a lender if they don't have at least a 620 FICO score. The property you want to buy must meet safety standards and building codes and will be your primary residence. In order to go through the process, you need to obtain a VA Certificate of Eligibility, COE. Without the certificate, you won't be able to get your loan.